Hi traders, and welcome to Price Action Trading School session 13, chart patterns and ECS pattern indicator. So today we will talk about chart patterns. You will actually see which patterns are important and how you might use our ECS pattern indicator after you complete the full Price Action Trading School. So before we start, have in mind that I will be very quick and concise with explaining, and I will not talk much about theory cred because it's not important. What's more important thing in forex market is to make money, guys, and we'll get straight to the point. So today, chart patterns and ECS pattern indicator. Quick definition: chart patterns are reflections of price action in any given time. So whenever you see that the price is doing on the chart, whenever you see the movement, have in mind that everything can be charted with patterns. So patterns represent a pattern that is formed within a chart when prices are graphed. Okay, guys. So for all new traders, for all of you who are first time here, chart patterns represent a pattern which is formed within a chart when prices are graphed. It's a form of technical analysis, and we traders use it usually to spot breakouts out of these chart patterns. They are either a reversal or continuation signal. Okay, so it will be either reversal or continuation signal. If it's a reversal signal, it's form of a counter move. If it's a continuation signal, it's a form of a breakout move in trend direction. They can be used to project price action and to react subsequently. So basically what we do with chart patterns is that we project price action and we react to the price movement subsequently. They appear naturally on the charts. For example, triangles and flags appear during indecision, accumulation, or distribution, excluding flat top and bottom ascending and descending triangles. That is what we will cover today. Chart patterns usually appear during accumulation and distribution phase. They reflect traders' decisions, okay, and there are standard and non-standard chart patterns. Of course, we will talk also about special chart patterns that appear on the chart, but they are form of some exotic chart graphing. These are usually standard chart patterns that can be found on the price: head and shoulders, rectangles, channels, flags, pennants, symmetrical triangles, ascending flat top triangle, descending flat bottom triangle, wedge continuation, wedge reversal, double top M, double bottom W, triple top, and triple bottom. So you can memorize these chart patterns. You can snapshot it, but have in mind that this webinar is being recorded and will be uploaded to YouTube. So you will be able to watch it as many times as you wish. So head and shoulders are bearish pattern. The price usually goes down. Rectangles are ranging pattern. Channels, descending channel is either a reversal from the top or reversal from the bottom. Flags are usually continuation. This is the form of a bullish flag. Pennant, usually continuation. This is a form of a bullish pennant. Symmetrical triangle, ranging. Ascending triangle, bullish. Descending triangle, bearish. Wedge continuation, bearish. Wedge reversal, bullish. Double top, bearish. Double bottom, bullish. Triple top, bearish. Triple bottom, bullish. Okay? Now, standard patterns will appear usually in the form of head and shoulders. This is, guys, inverted head and shoulders. So see this, head and shoulders, and inverted. So simply put, head and shoulders and inverted head and shoulders are one of most common patterns in forex world. Broadening wedges or megaphone. Also, when you see broadening wedge or megaphone, do not trade it. I don't trade it. Rectangle tops, double bottoms, scallops, flags. These are standard patterns that you will come in touch with these patterns because those are mostly patterns that appear in forex world. Okay, I'm not talking about stocks. I'm not talking about equities, futures. We are talking about forex trading. So these are patterns that you will usually see in forex trading. Head and shoulders, broadening wedges, rectangle tops, and bottoms. Usually those are accumulation patterns. Double bottom, scallops, flags. Okay. Now, head and shoulders and inverted head and shoulders are breakout patterns, and those are distributional patterns. Broadening wedges are usually accumulation patterns, and they are not very good to trade. Rectangle tops and bottoms are accumulation phase, and we expect a breakout. Double bottoms are breakout distributional. Scallops, distributional, flags, accumulation. Okay. Next to standard patterns, guys, we have special patterns. Hook reversal top, hook reversal bottom, cup with candle, atom and atom, V-shaped reversal or diving board, rooftop, and inverted rooftop. So these patterns require a dose of experience in forex charting. They are not very, very standard. And usually traders might misplace these patterns for some, let's say here on my other monitor. Yeah, but you cannot see it. Yeah. Basically, I will show you the indicator that will chart some of these patterns. These patterns can be misplaced for other patterns. But again, try to memorize this. Try to snapshot these, the slide. You can watch this video as many times as you like. And try to get these special patterns in your head because they will appear, but you might misplace it for some other patterns. Cup with candle is not a scallop, guys. This rooftop is not head and shoulders or inverted head and shoulders. You need to spot a difference because with head and shoulders you have a shoulder. With rooftop you don't have any shoulder. With atom and atom you have these. You see here on the chart. You have these legs. With W, you don't have the legs. With V-shaped reversal, you have a V-shaped bottom. It's not an inverted head and shoulders. Rooftop again. You see the roof, like you can chart the roof here, inverted roof. But it doesn't matter. If you still cannot memorize it and you have a trouble with this, have in mind that hook reversal top is bearish. Atom and atom is bullish. Hook reversal bottom is bullish. V-shaped reversal bullish, cup with candle bullish, rooftop bearish, inverted rooftop bullish. So don't need to memorize all these fancy names. You just need to remember which direction the patterns will go once the breakout of the pattern happens. That's the single most important thing when you chart patterns. Okay. Now we move on to special patterns. My favorite pattern is T89. It's a part of my Camarilla MACD teaching. For example, today we have a trade on euro dollar, and it's very, very close to T89, this rejection that happened. And we are currently in a trade of euro dollar. Now, today is 30th of January. You can open euro dollar chart and see how the pattern formed very, very close to T89. Actually, we have also another rejection that is a form of T89. I will actually open the chart and we'll show you that. But it's a good thing because this is one of my favorite patterns. And currently on ECS Live Telegram channel, out of, let's say, last 22 trades, 20 trades were wins and only 2 trades were lost. And I use heavily this T89, especially on intraday charts. That is a part of my Camarilla MACD trading method, but you can apply this successfully on your charts too. So the basic premise of T89 is that we have EMA 89. 89 is my favorite Fibonacci. It's 88.6, and I rounded up on the 89. My favorite Fibonacci ratio, 88.6. And usually when you see a pin bar rejection like this, the price will follow the rejection. So this is the bullish T89. If it's below, it's a bearish. Also have in mind that for T89 to be valid, we need to see a pin bar. It can cross, like here, it can cross the EMA 89, but the point is it should close like a pin bar and it's called T89. This is my pattern. I invented it. It's not like I invented some warm water, but then again, this is my proprietary name for this sort of pattern, and I use it extensively in Camarilla MACD trading and on my Camarilla MACD template. Now let's move on to ECS pattern indicator. What are trend channel? What is trending channel and trending indicator, and how to use it? Because this indicator will chart trending channel based on these patterns that I show you. It's a helpful trading tool. It charts bullish and bearish patterns, and you can use to trade breakouts. You will receive this indicator once you complete our price action training school, and you will be eligible for the indicator. But until then, you need to actually wait, guys, because we still have a lot to talk about. Okay, now I will move on to here is you see euro dollar trade, guys, and rejection from EMA 89 like this one. It's a T89 pattern. You see there was a signal here, and we are actually long on I have a lot of positions here because I am scaling in. It is something that I will teach you when we come to that class. So I'm long here on euro dollar here at this spot. Yeah, and you see that the price is rejecting. Also here on this chart, guys, let me show you. Let me just find it where I placed it. Okay, yeah, this is it. We will insert indicators, moving average, 89. Okay, now you see what is T89. I mean, I have the indicator that automatically spots that. It's a form of the indicator that is used for my Camarilla MACD, but you can also spot it manually. So this is T89, a perfect example of T89. You see this one. I will move on here. This one, perfect rejection, guys. T89. This is perfect T89 here. T89, not a perfect one. This is, although it's not touching it, but we can qualify it. Okay, now let's see if we have some bearish T89. It's good also that body is bullish or bearish, but sometimes it doesn't matter. This is not a good example. It should be below. Okay, you see how prices are reacting to this one. Marubozu, okay, but let's see if we still, I will actually zoom out here. Okay, yeah, then again, you see we are trying to find bearish now. T89, sometimes you will see it, sometimes you will not see it. But yeah, let's see. Okay, this is it. Yeah, this is it. Bearish T89 here. You see the price dropped after that. It spiked, but initially it dropped. We can use other pairs, whatever pair you want. T89 here, bearish T89. T89 here, not a perfect one. This is the perfect T89. This one, guys, here. Perfect T89. This is no-brainer. When you see this, no-brainer. Okay, so bullish and bearish, you see. Now, this indicator, ECS pattern, prints out different patterns. So I will zoom out, and you will see most of that, what it charts. Now, again, if you're still not sure what these patterns actually are, try to, again, get back to this, okay? Okay, now, okay, I'm trying to get it here so you can actually see it. Okay. Okay, I will get back to this slide. This is important slide. So these patterns, guys, okay? Many of these patterns, triangles, wedges, will be printed out with ECS, indicator. So you see, Usually when you see the indicator, you might expect a breakout. You don't need to use DMA. You can use it with your own system. For example, here, okay, we have a wedge and the breakout to the upside. Here we have a falling wedge, or you can call it basically, you don't, as I said, you don't need to memorize names. But here we have a form of a bullish pennant and a bearish wedge that broke initially to the upside, then went down. Here, these are standard settings. Here, you see the channel, okay, but also a form of a bearish breakout channel or a pennant that happened exactly this spot. Here, you see a bullish channel broke out to the upside. Then you see this sort of a pennant that broke to the upside. Then symmetrical triangle or a flag broke to the downside, and so on. Bullish patterns are usually shown with a white color, but for these guys, you don't need to have any color. Just watch this indicator and form your own style if you want of a breakout, because as I already said, these patterns indicate either continuation or a breakout. Bullish breakout, bearish breakout, bullish breakout, bearish. You can use it on any time frame you want. Bullish breakout, bearish breakout, bullish, then bearish, bearish, bullish, bullish. Here you see bearish, bullish, bullish, again bearish, bullish. The higher the time frame, the more successful these patterns are. So you actually might like to use these patterns on higher time frames, 4 hour and daily. You can also, guys, if you click it on these lines, it will automatically call the indicator, and these are standard settings. Okay. Try to use it as I say, to spot either continuation or a breakout. But you cannot receive the indicator itself, not yet. When we finish with price action trading school, you will be able to go through some the final exam, and I will say what the final exam will be, and then if you complete it, then you will be able to get this indicator and a lot more indicators that I will present you with during this price action trading school version 2 course. Do you have any questions, guys? Of course, you don't need to use the indicators. You can chart it yourself. When you get experience, guys, you will be able to chart yourself these patterns. So you don't need to use the indicator. But as I say, it helps you out. This indicator does not show head and shoulders, inverted head and shoulders. But then again, with experience, you will be able to spot these immediately, like I did exactly right now. Head and shoulders, shoulder, head, shoulder. How you trade head and shoulders, guys? You just need to place the trend line. All teaching tells us that you need to place a trend line below the neck, like neckline. This is what I call a neckline. I don't agree with this because how I trade head and shoulders, either from the top of the right shoulder or the breakout to the downside. But I spot a trend line. I don't watch at those, they call it necklines, because for me, the most important thing is the swing low of the bearish head and shoulders and swing high of inverted. So this is the swing low. Breakout is here. You see a retest. And neckline actually is not here. Neckline is there, but much better is to see the previous low. And you can trade it straight from the right shoulder. Let's see inverted head and shoulders pattern. I will try to find it right now. If I spot it, I will spot it. If I see it, I will spot it in a fast way. Yes, this is it. Shoulder, I will mark this here. Shoulder, head, shoulder. And when you trade a breakout at the high spot of the shoulder here, this is the breakout, retests, continuation. That's easy, guys. Once you get a knack of charting this, it will be very, very easy. Believe me, you just need a screening time for this. So again, head and shoulders, shoulder, head, shoulder. The low, this is the low of the head and shoulders pattern. Breakout, retest, continuation. You see? Not that hard, really. But much better is to trade short from this spot when you see this is dark cloud pattern. When you see dark cloud shooting star from the right shoulder, you short it immediately. You will get much better risk to reward. Here also, rejection pattern here, you can go long from there and just add on the breakout. So I hope that you enjoyed, guys. If you have any questions, feel free to ask. This webinar is being recorded and will be uploaded to YouTube channel. Sign up for more webinars, guys. I think that Forex trading is not hard when you get into the full dimension of it and you actually take care of your money management. That is one of the single most important thing in Forex trading. We will come to that part during the course. Yeah, Ron is saying, thanks, see you in 2 weeks in Utrecht, Holland, the Netherlands. Yeah, in 2 weeks, guys. Yeah, just to remind you, we have our seminar in Utrecht, and I will send you the link right away. Okay, so this is it, guys. You are free to come to register. It's free, so register for our Forex and CFD webinars and seminars. It's important, guys, that you come so we can meet each other. Okay. Thank you, guys, for listening. I wish you, I don't see any questions. I wish you a great trading day and talk to you soon. Cheers, everyone.